Bitcoin alone is going to be the biggest part of the entire crypto asset ecosystem. Our expectation out in 2030 that it will be a $20 trillion, it will be worth $20 trillion. Now, how much will ETFs get of that $20 trillion? I don't know, but that already right there is, if you think about it, I mean, it runs circles around SPY, number one, and I believe all of public equities globally, no matter what wrapper they're in, are valued right now at roughly $120 trillion. So when I say 20 trillion by 2030, that's a very big category.
Bitcoin and Bitcoin alone is going to continue to be the biggest in all of the crypto space. Cathie Wood's message is clear as she predicts Bitcoin will hit a $20 trillion market cap by 2027, which would put one Bitcoin at over $1 million per coin. This means that owning even just 0.1 Bitcoin could dramatically change your life. With its finite supply, decentralized nature, and growing institutional adoption, Bitcoin is poised to revolutionize the global financial system like never before. In her most recent interview, Cathie Wood, founder and CEO of ARK Invest, shed light on Bitcoin's potential to disrupt traditional financial systems and shape the future of global finance. Cathie emphasized the importance of the Bitcoin ETFs, which currently hold about 4% of the total supply of Bitcoin. Additionally, Cathie highlighted the upcoming Bitcoin halving, where the supply growth rate will fall below 1%, potentially driving up demand and prices, solidifying Bitcoin's value. Make sure to stick around to the end of the video, where Cathie also explains how Bitcoin is not just a risk-on asset, but also a risk-off asset. But before that, today's video is brought to you by Crypto.com. If you still haven't got a crypto card yet, you're living in the past. With traditional cards, you have to pay annual fees, they take percentages, and some banks charge you at every transaction. That's not the case with the Crypto.com Visa card. With a Crypto.com Visa card, you can spend your crypto anywhere you want, and the benefits are insane. With your Crypto.com Visa card, you can earn up to 5% back in Crow rewards on every transaction, enjoy 100% cashback on Spotify, Netflix, and Amazon as a new customer for the first 6 months, get complimentary access to airport lounges and elevate your travel experience, and flaunt your style with the sleek and stylish metal card. Now, Crypto.com is currently giving out a $25 new user sign-up bonus for Jamie Tree viewers. Here's how to get your $25 bonus and start earning up to 5% back. First off, download the Crypto.com app by clicking the first link in the description or scanning the QR code on screen now. Second, sign up using our referral code nutty for your instant $25 bonus. Thirdly, once you've signed up and have been approved, here's how to get your Crypto.com card. Tap the card tab at the right of the navigation panel, select your preferred card tier based on the required cardholder Crow staking or lockup amount. I personally have a Ruby Red card. The only requirement is you lock up 400 USD of Crow for 180 days, which is then unlocked. Then accept terms and conditions. And you'll have to have sufficient Crow in your crypto wallet for the 180-day stake or lockup. Finally, submit your delivery address. Then you'll get your Crypto.com Visa card, start making transactions, earning rewards, and enjoying the perks. So to claim your $25 bonus and earn up to 5% back on all your spending, click that first link in the description to get started with Crypto.com today. Now, back to the video.
All of the ETFs out there right now hold about 3.9%, roughly 4% as of today, of all the Bitcoin outstanding. Now, the really interesting thing about that is if you look at on-chain analytics, which our analyst David Puel does for us, you'll see that long-term holders account for, I believe, 15 million, the Bitcoin outstanding, roughly 15 million. Total outstanding right now is 19.5 million, and the total that will ever be outstanding is 21 million. Those long-term holders are not selling. That's what's going on with the price right now. And the flows into the ETFs which have taken the friction out of buying Bitcoin, and which can be used as collateral for loans, whereas Bitcoin itself cannot, suggests to us, that added 1.5 million to go in Bitcoin is going to have to cover a lot of investors, institutions, and so forth. In other words, the price will have to go high enough to wrest the supply, some of the supply, out of long-term holder hands. And just to clarify, long-term holders, and again, you can track this on chain, they have not moved their Bitcoin from their wallets at least 155 days. And when that occurs, the odds that they will move their Bitcoin go down dramatically unless the price spikes dramatically. So the halving, so we'll go from roughly 1.9% growth in Bitcoin supply per year down to 0.9%. So we will drop below 1% for the first time. And if you look at the long-term history of gold, very long-term, what you'll find is the average supply growth has been roughly 1%. So now Bitcoin supply growth is dropping below the supply growth of gold. That is a milestone, I would say. And the other difference here is when the gold price spikes, there's usually a mining response and the supply spikes with it. That cannot happen with Bitcoin. So it's quite a different dynamic. So the halving is that milestone. And if you look historically after halvings, it's usually been very good for the Bitcoin price. Now, it doesn't happen right away. I don't know why it doesn't happen right away, but it doesn't. Now that the market's becoming more efficient with ETFs, it might, because think about how many people even know about the halving this time around when they didn't even know what coin was 4 years ago. They didn't know what it truly was. And if I can just throw one in terms of how we try and describe what this monetary revolution is, and each one of these words is important. The first, global, that's critical. Private, no government oversight. Digital, decentralized, rules-based monetary system in history. It is what my mentor, and many people know Art Laffer for his Laffer curve and fiscal policy and so forth. He's a monetary scholar as well. And he said, I have been waiting for this for 50 years, ever since they closed the gold window here in the United States in 1971. The financial markets, when you've got the entire ETF infrastructure out there ready to arbitrage these sorts of events, we may pull forward the price increase and accelerate the transition you're talking about. I think something very important happened last year. In March of 23, regional bank crisis here in the United States. Regional banks imploded, some went bankrupt, and Bitcoin exploded. It went from 19,000 to more than 40,000. What did that demonstrate? That demonstrated that Bitcoin does not have counterparty risk like banks do. And so it became a risk-off asset. Before, we had just thought of it as a risk-on asset. When liquidity is flowing, Bitcoin will be one of the prime beneficiaries. But this idea that it is also a risk asset, and as we hope we've shown in our own new asset class paper, white paper, its correlation with other assets is so low that institutions have a fiduciary responsibility from an asset allocation point of view to at least look at it. And if they want to dismiss it, fine. Vanguard did. But what we think that Vanguard is doing, well, one of two things. Vanguard has never invested in commodities, so it's just treating this like a commodity. For the most part, it hasn't. But we think it's a new asset class, and they will be depriving its clients of access to a new asset class, which if there continues to be low correlation of returns, what will happen is those using it will see increased returns per unit of risk, and they will outcompete the Vanguard advisors. So, I think there will become, even for the Vanguard ecosystem, a demand pull. One thing I will say, right now, no wirehouse, so whether we're talking about Morgan Stanley or Merrill Lynch, B of A, UBS or Wells Fargo, no plan has approved Bitcoin yet. So all of this price action happened before they approved. And so, we haven't even begun. With our new expectations for institutional involvement, the incremental price that we assume for institutions actually has more than doubled. So, I don't want to give out any particular prices, but because we don't know how quickly the more independent registered investment advisors in the United States, those platforms are saying, give us 3 months to do our due diligence. The others are saying we need at least 6 months. So, I would put those in the institutional bucket as well. If a country's currency is going down, but Bitcoin's going up, that's a huge hedge. It's going to protect them against that eventuality, because what usually happens is the IMF comes in and basically tells them, we want you to increase your taxes, cut your spending, we're going to regulate you more, and it would be 180 degrees against what I would recommend. But that's the IMF prescription. So to protect against that, Bitcoin would be a very good hedge.
So there's Cathie Wood's prediction as to why Bitcoin is going to a $20 trillion market cap over the next few years, putting one Bitcoin at over $1 million per coin. This means just 0.1 Bitcoin would be life-changing. As Cathie Wood explained, as more institutions see Bitcoin's advantages, they are more likely to invest in it, pushing up its price and making it more widely accepted. As institutional adoption grows and regulatory clarity improves, Bitcoin is positioned to take a huge role in investment portfolios and financial transactions globally. Whether as a store of value, a hedge against inflation, or a medium of exchange, Bitcoin's impact on the future of finance is undeniable. Also guys, if you want to stay most up to date on the crypto world, I send out a daily 5-minute crypto newsletter that covers expert predictions, on-chain data breakdowns, and breaking news, all for free. Click the first link in the description, enter your email, and join over 50,000 others to become a better crypto investor right now. Anyway guys, hope you all enjoyed today's video and that provided you with some value. I'll see you all in the next one, and as always, all the best.